Good morning, everybody. This is a free e-letter update and briefing on video that will be short, but I want to share something that is one of the most important tidbits of information that I've learned in my 30-year career investing, trading, speculating. And this is why it's really, really important for those of you that are in the metals and mining area and gold and silver, because obviously in the last 18, 20 months we've shifted from a very frustrating bear market into a bull market, which has really bared the most fruit for the producing companies when gold rose and earnings go right to the bottom line. Wall Street's still Wall Street, finance is still finance. People like cash flow, they like net income. And when that stuff is going to the bottom line, when you have fixed costs, um, the gold stocks have been the best performing asset class in the world this year. So, but we have not seen that trickle in yet too much. We have started to see it. The development stage companies are the ones that I would put underneath the producers, and that being companies like our International Tower Hill bet, where you've already got 13.6 million ounces of gold in Alaska. The grade, you've had decades of work and tens of millions of dollars in work done on it, and it's just a question of where does gold have to go because of its grades to be able to start someone looking at it like we're either going to buy this thing or we're going to fund it and we're going to build a mine. It's in Alaska, and Alaska had tarnishment on it for the last 4-year presidential cycle because well, you know why. Now it's different. And you have another element there. I'm not going to just get into Tower Hill, but I want to talk about it as it pertains to how high could this go. So we also have the antimony piece. If you're not familiar with antimony, you need to get familiar with critical minerals because that bull market is also early innings. And what John Paulson, the largest shareholder in Tower Hill, alongside of Electrum Group, Sprott, Kopernik funds, they own 70% of this company. It's locked up, and they have been the funders. They don't need us. They don't need any money from us, but they just put in about 4 million, I think, in the last round. No warrants, no discounts on the market to do a study on the stibnite, which is antimony that they have found over the years, which for most groups not that far back, that was a penalty because of the toxicity. And most folks wanted to rid of it or not really talk about it. But we have in Tower Hill's documents, go dig through their 600-page feasibility study, and you'll find that we're talking about 1 million+ tons of high grade. There's some very high grade intercepts of antimony. So they started a study. I don't know when that's going to be done, but they've been working on it for months where they're going to actually look at. In the past, what you would do is you would have to use, again, the antimony as a negative in the sense that, well, how is this going to affect our ability to extract the gold right next to it? Now it's a huge asset. The price of antimony has gone from $8,000 a ton to over $60,000 a ton in just over the last year. And it's the biggest squeeze on a critical mineral that has to do with everything from our national security to a bunch of other things. It is very important. And case in point, Paulson's position in Perpetua Resources, which is called Stibnite, the Stibnite mine, that's a gold mine that's being built, 6 million ounces of good grade gold. But the funding for that and the permitting acceleration has gone through because of the fact that their main byproduct is antimony. Now, we look at stuff like Metallis, where on soil sampling alone, they had anywhere between 1% and 4.5% antimony on the surface. With the stibnite mine, it's 0.06% grade. So it's low grade antimony, but they've got a ton of it. So what's happened? Billions of dollars. I don't even know the number now. It was just around 2 billion. I think it's gone up to 3 or more recently. Don't quote me, but that's from government grants, government loans, including they gave Perpetua, the Pentagon did, 60 million to accelerate permitting. They all want and need the antimony. So that's why, like Metallus, we're 21 miles away. And they're gonna they're drilling right now. And I think they're gonna hit some. It's not even like, even if they didn't have antimony, the silver grades and prospects there are gonna make this thing, it's gonna be a wild one. But anyway, on International Tower Hill, so what did Perpetua do with the same chairman as International Tower Hill and the same largest shareholder? They used the antimony to get money and permitting acceleration. International Tower Hill, I believe they're going to do the same thing. And Perpetua, just for an example, I had bought this stock a long time ago through our premium members when it was called Midas Gold. And it was back when it was a real pain in the ass and a question about whether or not they were going to get this thing permitted. This is going back to 2020, 2021. But now, and back then, let's just see what it was on a valuation basis. You had this thing dip. It was like, it actually went below $2 in the 2020 crash, and then it was back under $2 in 2022. And it now is at $17, and Perpetua has a market capitalization of 2 billion. And International Tower Hill yet sits, and this is the difference. The difference is the stage, the funding. The gold grade at Livengood for Tower Hill is lower, but after $2,500 gold, this baby's in business, and it's massive. It's massive. 13.6 million ounces in a resource, and reserves. Reserves are a big chunk of that. And even before, they had to peel back the number of resources back in 14, 15. A lot of companies scaled back their resource, which was totally valid back then. And then they switched it up in terms of the regulators. It was over 20 million ounces. It is over 20 million ounces. I'll just say that as my own speculation. So it's huge. Largest undeveloped gold exclusively asset in North America. And so the point was, like, around International Tower Hill, is that as an investor, so I'm not saying this to brag, but I've had huge winners in this space, and I've had huge winners in crypto and in tech stocks my whole career. And crypto became a newer thing, obviously, just in the last 7 years or so. But on the mining side, the junior mining side, besides, two handfuls of cryptocurrencies that I made 100 to 650 times my money on in 2021, junior miners were the biggest winners after that. Things like Encore Energy from 5 cents to $2.27 with a warrant. I mean, even Gungnir, I found at a half a penny that went to 40 cents, and we had gotten a full warrant on that. So, these are from plus to minus. It doesn't mean that those profits were all locked in at those levels, but big moves, Abra Plata, numerous other ones where you're talking about not only a triple or a double or a 5X. I've been lucky enough to be involved in a plethora of 10 to 600 times my money investments, and you only need a few of these. But what I found especially important in the bull market in crypto, which is also condensed versus traditional assets, it's intense, obviously, because of it being a newer asset class. The thing that I'm most proud of is, I remember with my speculative account on the tiny tokens, everything was flying. I knew I was making the most money I've ever made by far in life. And there was an 11-day period where the account that went up the most, okay, I'm talking about March of 2020 crash, maybe it was worth $115,000 in that account, that ended up topping out at just under $7 million. So I'm talking about big money creation. But the biggest thing I was proud of is that there was a period of time right in the meat of the parabolic time frame, right before that, right before the things just started to get bubbly and crazy. I didn't log into that account for 11 days. I didn't even want to look because in bull markets, not only with price, if you want to find out where these things are ultimately going to go, you have to give them some time in a bull market. We just started a bull cycle in gold, silver, and mining stocks not that long ago. So Tower Hill, we came in and started buying that up at 45, 50 cents US at the end of last year and all through the first quarter. And we bought it up to $1 and all this stuff. And it's at $1.53. It's at a $330 million market cap. So a lot of the folks in, elite and premium, they had carte blanche to just chip away, buy it. Me calling and saying, this one you make a big position. This is one you roll the dice on big time. And you have enough of it so you could sell a third at a triple and then just see where this thing goes, because it's going to take time to see where THM and ITH in Canada eventually goes. But I will say this, we're trading for $24 an ounce in the ground. And I've looked at a couple of different comp sheets with regard to various staged entities that are getting valuations closer to $80 an ounce in the ground. And now that gold broke up, if it would have peeled down and went back into the 2000s, I wouldn't necessarily be saying what I'm about to say now. In fact, even though I think you're at 27, 2,800, companies like THM, their NAVs are in the billions of dollars. They just need to update those things formally. Was also very cheap and going to continue to go. The development stage companies, THM is the top performer in the world. That goes up against Nova Gold, Seabridge, Northern Dynasty, Vista, doesn't matter, and crushed GDXJ. GDXJ, since that December time when we started stepping in, is up 86%, THM 231%. So what do you do from here? I've told you guys about that, what I think is a pretty much a layup target at $3 US. That's where we're going to see, real resistance, and maybe take a few times, a few weeks, a couple of months to break through that price. But once that price is bested, the next high was the 2011 high at 10 and a half bucks. My question is, I think it goes to 3, and anybody who's loaded in this thing and wants to reduce some risk right below that number, that's the area that you do it. But you don't want to sell yourself short if this is going to be a 10 to a 30 bagger, right? So you can manage some of the risk by taking some profits. You still have 100% upside from right here, okay? And this is just going to start to accelerate as gold goes to 4,000. This shit is going to start popping. And that goes for the other development stage companies too. But Tower Hill is my favorite by far for various reasons. But think about it. Gold at 1900 in 2011, and Tower Hill was at $10 US at that time. Is it going to go back and test that? Yeah, it is. That's what is very likely. Is it going to go higher than the highs 14 years ago? Probably. What's it going to take to get there and do that properly? Up, 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 not just parabolic and then a crash down. It's going to take some time. So I'm giving this thing time to change my life, to change my foundation. The funding that's going to be there is based on how I play this. But the book I was talking about, I wanted to reference, is Reminiscences of a Stock Operator, talking about one of the greatest speculators who ever lived, Jesse Livermore. It's a fantastic, it's like a, sort of a Bible-esque book for those of us that are in Wall Street and are investors and traders. But the biggest thing that struck me out of that whole situation was Jesse would have all these things he was doing and making money. And I'm paraphrasing, but they would go into this old timer's office every once in a while throughout the book. And the comment was like, wow, whatever was around back there. US Steel really has been strong lately. And the guy would just say, well, it's a bull market. So, and then you'd walk away. And then you'd have something getting smashed years later. They make a comment and he's like, well, it's a bear market. So, and then he'd walk away. And I didn't know what he was talking about and why even the author, Ed Lefevre, put that into this book. But he gave us a real key. The key is, are you in a bull or a bear market? Number one, in a macro way, with regard to the whole world and how it's trading, we're about to go into rate cuts. This is going to be a super bubble of super bubbles and likely the last real chance to make sick amounts of money and then actually have places you can go to protect your wealth. It's going to be very exciting. The last thing you want to be is underinvested. And I still believe the value chain in terms of value, what I see in different sectors. So you have bull or bear market macro, bull or bear market in a sector, and then bull or bear market in individual names. The first two pieces are the most important because, as you'll see, if you looked at all the development stage companies, GDXJ, GDX, generally all of those stocks are up. It doesn't mean that the individual company did anything special. You can outperform when you identify certain things that are going to be catalysts or that are going to be extra value adds. That's what we try to do here. But the most important thing is that we're in a bull market. And a bull market, after even just the 4 years we look at from August 2020, where everything was destroyed for 4 years in the juniors are just starting to get a little bit of recovery. Do you know how much upside those stocks have? It's insane, the ones that have survived. And some of them I'm down on paper 30, 40, 50%, but I still keep buying them. If you're not a premium or an elite subscriber, you're never going to get access to the stuff that is going to end up making us 20, 50, 100x. And by the way, you can actually buy 10 stocks with the same amount of money on our venture list, and 9 of them could go to zero. And the one that goes up 50, 100, oh, you don't believe that? Well, look at what happened from August to January. Cypherpunk, HODL, went up 60x. And I got out of 93% of my position when it was right below the $6 and made those alerts to everybody. But I don't do that necessarily here. So you want to get serious about this stuff, you need to get the ideas that come through, much more content on premium and elite. Elite being that you're going to get included in some very like hot private placements with warrants and stuff that are grouped because we all come together. We have more capital, and then the companies know, well, GIL is going to talk about this. So it's like free marketing, and I don't take a fee or anything like that. It's just for deal flow from myself and my people. But in any event, the biggest thing I wanted to say today is that you don't want to sell yourself short because you have a stock that goes up, 30, 50, 100%. When we just started the bull market and the juniors are literally just starting. You've got to keep a good chunk of this for later, and you need to be fully invested or very close to it right now with another pouch for any real retracement that's going to be violent. We'll have that in the middle of the cycle, somewhere just like between what was it, 74 and 76. Gold was cut in half, and then resumed and went to that 850 level from 200 after the correction. We're going to have things like that happen. I'm going to be here. It's all just gravy to me at this point because I've been through enormous swings. But Power Hill, I'm making a strong buy, upping of my buy up to limit to $1.65 USD. If you want to find out what that is in Canadian, which is not very liquid, ITH, put your calculator out, 165 times 1.38. That's what you pay up to there. The reason I'm doing this is because I am absolutely, utterly convinced we're at least going to $3. So if you buy it up to 165 and you have a 75, 80% gain, probably, by the end of the year, you could take a bunch of your risk off. I wouldn't sell all of it, but you could say sell a quarter or a third, and your cost basis is going to be tiny. And then you can wait for the big move, which will come thereafter when we get past $3. The other thing I just want to mention, palladium. I am very bullish on palladium right now. It is the precious metal that I think is still the cheapest alongside of silver, obviously, but TALL is an ETF that those of you that are larger investors, take a look at that chart. You can end up buying, $50 million worth of that position, and it's liquid. I have my cost average is right around $100. I think it's at like 102. And it's on right after a big pullback and correction. I've been long platinum for a while. That's been flying. I got recently very long in palladium. So that's a newer one. And I've been pounding the table, obviously, on silver quite a bit and gold for a long time. So you guys should be all set there already, right? But palladium's a new one. If you're light on mining companies and stocks, get at least a premium membership for 6 months. It's only like $777. It's ridiculous. Even if you're like playing with 10 grand, I mean, you have no idea what you're missing. But then also if you're short on the metals, I mean, physical silver is still a very screaming buy because it's going to $100 to $200 in the coming years. I'm convinced of it. And the first big move after 50 is going to be 70 to 90 or 100. And then we're going to have to see where we go from there. But I wouldn't be surprised if we see $250 on silver this decade. But palladium to me is a layup where you can have physical metal, a proxy for it. You don't have to, you can order it too and have physical coins, but I really like that ETF for exposure to what is going to be a ripping precious metals market, hard assets market, and commodities market coming up just ahead of us. And you need to be shopping, find out where the value is. That's what I do all day long. And I'm very excited for those of us that are still here after all the shitty markets and everything. Thank you guys for even still listening to me, because we had rough times there, but now is when I'm going to try my best to make it up to everybody. And that means not only making a fortune, but then keeping the bulk of that fortune versus doing what many of us have done many, many times. Ride it up, ride it down. No thanks. Cheers, guys.